Hey my friends, this is Daniel Aldie, and today I want to talk with you about how to build your credit. Now, credit is so important and very few people understand it. It's not taught in school, it's rarely taught at home, it's not taught in church or even at work. And a lot of us have to research it. A lot of us have to study it. And I'm telling you, I learned the hard way and I want to make it extremely easy for you. Now I have a very good credit score. So you can trust exactly what I'm about to tell you because what I'm about to give you is absolute gold. So listen up. The first way to build your credit is to find out exactly what your balance is. You've got to really understand how much you actually owe and how much you have available. What this basically means is that if you have any debts, whether it's student loans or credit cards, mortgages or car payments, you've got to find out exactly how much money you actually owe to your creditors. Now this could be challenging because a lot of us don't want to face our debt situation. We kind of want to run away from it because we didn't actually know what we were getting ourselves into. Well, we actually knew, but we didn't do enough research to know exactly what that would mean. Well, we knew what we were getting ourselves into, but we didn't know exactly what it would mean in the future. There are many online tools that can help you access what your credit score and situation actually is. It'll show you how many debts you owe. It'll show you how many accounts you have open. It'll show you all that useful information that you absolutely need that will help you get to where your credit needs to be. When it comes to finding out your balance, you have to understand the second step, which is knowing your usage rate. And usage rate is basically the number of dollars that you have used based on the credit that you have available. So for instance, if you have a $1,000 credit card and you used 400 of it, that means you have a 40% usage rate. You've used 400 out of $1,000. Now, if you want to improve your credit score, you want to be able to get that usage rate down. You want to get it down to less than 10% so that your credit score will eventually rise. That means you have more advantages in society. That means that you can borrow a loan from the bank. That means that you can get a mortgage from the bank. That means that the bank will send you more credit cards. That means that you'll open up a plethora of opportunities so that you can fund your future projects and even your lifestyle. But hopefully you're not funding your lifestyle in a luxurious way on credit. Try to get your usage rate to under 10% on all of your accounts. Once you do that, it will give you tremendous advantages in society. The third step that you want to take to building your credit is to negotiate your APR. Many times you can qualify for a better APR rate if you would only call your bank, if you would only call your lender, if you can only call your creditor and actually ask them exactly what you need to do to lower your APR. Now there's a lot of ways to do this. You can take matters into your own hands and you can start making quicker payments so that there's less interest accrued on your accounts. For instance, a lot of people pay on a monthly basis, but if you paid on a bi-weekly basis, you can pay down your interest faster and it will cost you a lot less in the long term because now you're getting closer to the principal or overall balance of your account. So go ahead and make early payments if you can. But make sure you also call your creditor and ask them what your interest rates are and if it can be negotiated. If it cannot be negotiated, try to convert to another lender who can give you a lower APR rate. A lot of times you can do this with the cars that you buy. For instance, let's say that you didn't have good credit and you bought a car and that car had 10% APR. Now you might say, oh wow, 10% APR is pretty high for a car, but a lot of times people get stuck in those payments, and those payments are pretty high. But if you're diligent, what you can do is call up another bank and ask them if they can assume that loan. Maybe they could assume that loan for 7% or 5%, which will take down your monthly payment and give you a ton of joy. The fourth step in building your credit is to pay it off. Now I know that this sounds obvious, but you really have to pay off your debts. A lot of people want to invest money. A lot of people want to start businesses. A lot of people want to do big things, but they have all this accumulated debt. Now, sometimes we may not agree with our debt. For instance, if we have a $50,000 college loan, but we're making $40,000 salary, we might be saying, how are we making less than we actually owe? And we don't agree with that. But what I'm saying is that you have to overcome that emotion. You have to overcome that former way of thinking so that you can pay down that debt and supersede all of your goals. You have to consider all your emotions when it comes to debt. because you have to really understand that your bills don't care about how many times you've cried over it. What it cares about is that you think logically, create a plan of action, and pay down the number of debts that you have. The fifth way to build your credit is to consistently learn and teach others. Because when you learn about your credit situation and help other people deal with theirs, you can learn so many new things. Because remember, in our major institutions, these things aren't taught. We don't learn about credit. So if we learn about it by ourselves by doing a quick Google research and talking with friends and family, we can learn so much more about our credit situation and pass on the lessons that we learned to build our own credit scores. Obviously, that is exactly what I'm doing right now. So subscribe to my channel, hit that notification button, and share this video with a friend or family member who you know needs it the most. I look forward to seeing you on the next video.